To everyone go around and say their names and the co-op that they represent or the organization that they represent. We'll start over here in the corner.
Can whoever's in the corner move out into the room a little bit and see her?
I'll try to hide.
Thank you.
Hi, my name is Sabatina, but you can call me Sabby because people say my name is Mom. And I'm with the Worcester Roots.
So we have people on the computer, so if you're going to be way back there, you have to speak up, or you could get closer.
Okay.
I'm just going to keep reminding you because it's not fair to the people on the computer if you're way back and you're talking quiet.
I'm this. Okay. So hi, my name is Sabatina, and I'm with Texas Busters. Worcester Roots. Yeah. What was the question? That's it? Yeah.
Name, organization, anything you want to say.
That's it.
I'm Kaylin. I'm with Texas Busters.
So what your name is?
Kaylin?
C-A-I-T-L-I-N? K-A.
No T. It's not T.
Kaylin. Gotcha. Thank you. Sorry.
My name is Khalifa. I'm a Future Focus Media Co-op, and I'm starting this cooperative with my sister on making graphic T-shirts.
Cool.
I'm Kai from TSB and Future Focus, as well as starting the co-op. She's my team called Culture Tees. There you go.
Yep. I'm sorry, what was your name?
Kai.
Kai.
Yep.
My name's Sergio. I work with Worcester Roots and Future Focus Media Co-op.
Judy.
I'm Judy, and I'm with Diggers Landscaping Cooperative. Still under Worcester Roots.
I'm Amy, and I'm with Diggers too.
I'm Scott, and I'm also with the Diggers Landscaping Co-op.
I'm Haji. I'm a student at WPI, and I'm working with the Worcester Roots on the greenhouse project.
I'm Maggie Cohn from the Cooperative Fund. Oh, I'm sorry. We have people on the screen.
Yes.
I know you're eating. I'm
Sorry, you're
That
next.
was rude.
Your turn.
Hello. I'm Katie Nebazar. We're with Soul Cherries Petty Cats Cooperative in Providence.
Thank you. I'm Maggie from the Cooperative Fund of New England.
And I'm Dorian, also from the Cooperative Fund of New England.
I'm Julius from Worcester Roots.
I'm Matt, and I'm with Future Focus.
I'm also Matt, and I'm also with Future Focus and Worcester Roots.
I'm Shane. I'm with Worcester Roots.
That's everybody.
For now. Hopefully the beat crew will be joining us soon. And Neuron Robotics is probably running late as well. Great, so we're running a little late, so we're going to dive right into a little presentation from Dorian and Maggie from Cooperative Fund in New England. And again, people on the online, let us know if you can't hear us at any point.
Okay, so my understanding is the agenda for tonight is really to talk about financial statements. We wanted to sort of frame that as since we represent a lending organization, I wanted to sort of frame that in terms of what we look for in financial statements when someone comes to us requesting a loan. Dorian, would you like to recite the 5 C's of credit?
Sure, we look for 5 different things that come under 5 different categories, and for shorthand, they're called the 5 C's of credit. I actually am new with the Cooperative Fund, and I'm new as a loan officer, so it's the first time I've actually heard of these things, even though I've been an accountant for almost 20 years. So the 5 C's of credit, the things that we look for are collateral. What do you have? What are the assets that might back up that loan that we make to you? And one of the things about the Cooperative Fund of New England is that, we look at hard assets, but we look at the whole picture as well. can probably say a little bit more about that as we move on, but I'll keep going down my little list.
Go down a little list.
So from collateral, then we also look at capacity. That's the second C. Capacity, can you pay the loan back? So when we ask, can you pay the loan back, we're looking at your cash flows. And sometimes that's a matter of your guesswork. What do you think your cash flow is going to be next year, or the year after, and how do you come up with that guess? So we kind of check in with you and test your assumptions. Are they realistic? So collateral, capacity, capital. That's the third C. Capital, that's the money you have on hand, your equity, the equity that you have in your business. And in particular, if you're a worker-owned cooperative, each worker-owner, each member, you know, what you're putting into the business. So what's the equity that's already built up into the capital? Capacity, collateral, capital. Conditions. What are the general economic conditions under which you're launching this business or operating this business? How do things look? What's your competition like? What's the general state of affairs? That helps us evaluate whether it's a good time to make a loan and how much of a loan and those kinds of things.
And that's information that would be in your business plan.
Yeah.
So when you draft a business plan, part of what you're looking at is are the conditions in your area good for the kind of business that you want to start? If you're starting a printing company, is there a need for a printing company? How much competition is there? How much work is there? How much printing are people actually having done? Is there enough to generate the kind of income that you're going to need to keep your business going?
Yeah.
So that's sort of an overview of the conditions for your industry in your area is a really important piece of the business plan, and that's something that we want to look at. So we don't see you setting up a business that is just like the wrong business in the wrong place at the wrong time,
And
which happens.
And the last C is character, and with co-ops it also includes communication. So when they ask about character, I mean, that's the real squishy stuff. That's, you know, is there a good vibe happening? You know, does it seem like people are honest? Is there integrity? Are people communicating well with each other within the organization and communicating well with us as loan officers, or, you know, so those kinds of things that, you know, all the things that make you just kind of feel good about the thing, character.
And that's it's in a lot of ways it's more difficult to gauge, but it's really important because if you have I've worked with a co-op where everybody came together because somebody wanted to do a business, and so he advertised on Craigslist for other people who might want to do the business. And of the 7 people who started that business, there are 2 now. Because, you know, you really need to look at, does everybody really have the same vision? Do people share the mission statement? Can people talk to each other? Do they share the values? Is this a group that can get along? You have to think if you're starting a business, it's kind of like moving in with folks to a certain, right? I mean, it's co-op houses deal with this all the time, you know, who washes dishes, who doesn't wash dishes, who likes the temperature high, who likes that. So it's not exactly that basic, but people need to be able to get along, because if your business hits a rocky point, you all need to be willing to hang together and able to hang together to work things through, to get out to the other side. That's really important.
So for this presentation, a couple of the 5 C's that we're really going to focus on involve capital, that's your equity, what have you put into the business, and capacity, your ability to pay the loan back, what are your cash flows. And to evaluate those 2 things, financial statements come into play. Can you produce financial statements that describe the activity in the business for the past year, that give a snapshot of where you are today with assets, liabilities, equity, and can you devise cash projections for the future based on reasonable assumptions? And so with that piece of information, when you're using financial statements to communicate about your business, to communicate to lenders, but also to communicate to yourselves as investors and owners, as decision makers about what you need to do next year or next, you know, what's happening in the business. So the more reliable your financial information is, the more successful you'll be, the better decisions you'll make, the more likely you'll be to attract other financial financing options when you need it. So the emphasis here is on how to communicate through financial statements and what they look like. And we understood that you've maybe done some work with some financial statements.
Or that at least some of you have. Did some of you do the Co-op Academy last year?
Sure.
Yes, Soul Chariots has.
Okay.
Diggers has. Have Future Focus folks?
I just started Future Focus this year.
Yeah, different
Okay.
people from Future Focus.
Okay, so if we're really going to be talking about those kinds of financial statements that tell the story of your business, which I would say are basically the profit and loss statement, which it would include sort of profit and loss projections, and the balance sheet, which lists your assets, your liabilities, and your equity. I guess the question would be, who already knows about what, and what questions would you have that you would really want us to hone in on tonight? So even if you're just sort of starting, what do you feel like is both most pressing to you and sort of the most interest to you? The floor is open.
Is there a multiple choice?
No. Sorry, these are essay questions.
One of the things that this is certainly not my expertise, but one of the things that I get foggy about is the nature of our organization, and our work has changed over time. So and our processes have changed over time. So we need to somehow produce a record of some sort of consistency, I guess, in how in our accounting. Do we need to be
Well,
I don't know.
that's a great question. I think it's something that happens very commonly with finance. It's like, what are we supposed to do with this? How's it supposed to? And actually, it's better to focus on how do we get what do the numbers tell us? Do we know what revenue, what people are paying us for what we're doing? And more importantly, even, do we know what it's costing us to do that, to earn that revenue? And just accumulate those figures.
Right.
And then you'll be able to sit back and look at it and say, what's the story that it's telling?
Yeah. So I would say, we've made some mistakes, we've done a lot of learning along the way. So if we show that we are learning from our mistakes, then that's good, right?
Sure.
That's enough.
Well, and financial statements can also include notes. So if there's one number that was, say 1 year you're doing a lot of hardscape, and the next year you're doing a lot of snow plowing or whatever. So your cost 1 year for stones is really high, and the next year it's really low, but your cost for equipment 1 year is really low, and the next year you buy a lot of snow shovels or plows and it's really high.
Yeah.
You just put notes. You put notes in your financial statement to explain that.
Right, okay.
Well, so can we interrupt and do a little intro for the people who just arrived?
There's just a couple more.
Are there more coming?
Yes.
Doctor, then we'll wait.
And our request about questions, there's no right or wrong, and there's certainly there's no stupid questions. It's really, we want to provide you information you find useful. Kai, you have?
Yeah, I'm not sure if this is related to financial statements exactly, but going back to the compound interest, what if you want to actively make interest, instead of letting it sit in a bank, you invest it into a project you think that will just pay back very quickly. If you buy a little arcade game, you just put it in an establishment where kids will play it. How much would you take out of your revenue or whatever and invest it into something like that?
Well, there's not a bright line answer to that. That's a judgment call that you get to make. arcade machine and how much money will I get every day or every month for doing this, and then comparing that to the other places to invest the money. Yeah, and that's where financial statements help you figure that out. Good question.
I mean, and the other thing with investments like that is that there's often a certain amount of risk involved, right? That sometimes it's a statement of faith on your part in the project where you're investing your money. So maybe it's an arcade, maybe it's somebody else's business, or it's your own business, as opposed to a bank. You're expressing your faith and support, but you're also saying, I'm willing to take a risk, but that means that if things don't go the way we think they will, I may lose some of my money.
Okay. Thank you.
Sure.
This is everybody.
This is everybody? Okay, so who is everybody?
So names and your cooperative, what you do.
My name is Sophia. I'm working with Matt and Dania and the rest of our Providence group. And our cooperative is El Banal.
Called what?
El Banal.
El Banal?
Yes, and it's a name.
Bees, you're the bee lady.
Yeah.
What's the word for bees?
Abeja.
Abeja.
My name is Mariela Vargas.
Maria.
My name is Cici Farinas. Vengo de la misma cooperativa de
No, I know that, but
The name.
First name, last name.
Cici
Farinas.
Farinas.
Cici Farinas. Thank you.
Hi everyone, my name is Miria and also a part of El Banal.
My name is Marianne, and I'm just here to interpret for them.
Thank you for coming.
I think we have a newcomer on the Providence side.
Ah.
Hi ladies.
You want to introduce yourself? Say your name.
Oh. I'm Ailey, and I'm from the Petticat Cooperative called Soldiers.
Thank you.
Anything else that I should say?
No.
No.
No, that's great, Anna. Thank you.
Quick name and group you're working with.
I'm Marina. I don't have a co-op. I'm helping out the Toxic Soil Busters, but I have an idea for a coffee shop co-op one day.
So we thought if there aren't any other burning questions, then what we would do is just sort of quickly go over those. Sir?
Yeah, I had a question.
Yes.
I don't know how burning it is. But what kind of accounting practices do you think yield the kind of statements that would be ideal? Or I imagine that's part of your presentation, but if it's not, what kind of things should people be doing with their checks or their bank statements to ensure that they can produce these kinds of financial statements?
Well, that's a really good question, and I am not a bookkeeper. And Dorian is a CPA, but she's not a bookkeeper either. But so maybe you could sort of lay that out. But I just would say one of the things that I think is really important is to talk, if you do not have someone in your group who is a bookkeeper or is comfortable with bookkeeping, is to think about hiring somebody, even just to come in once a month, to make sure that your bookkeeping practices are as good as possible.
So you can do a lot of it with an Excel spreadsheet.
Mm-hmm.
But if you can get QuickBooks and have a person once a month even make sure that the transactions that your business has conducted, that the results of those transactions are recorded in QuickBooks. So revenues, cash that you've received, deposits made. Keep your bank statements, balance your checkbook every month. Make sure that the information is included in QuickBooks or in an Excel spreadsheet, and that the bookkeeper or other person who's designated to keep track of your financial activity, that person can provide reports to you every month, and that you can understand what those reports are telling you.
And I would just say the key pieces of information, right, is where does money come from and where is it going? So that is all. If you keep it on an Excel spreadsheet, there should be a column that says, you know, I mean, obviously like tracking check numbers if it's money that you're depositing and what it was for. And if you have various things that it would possibly come from, so which program would it come from? So, I mean, I work for nonprofits. I really need to track when money comes in, what program is it for? When money goes out, what program was every expenditure spent on? So that at the end of the month, I can look and see how much money every program brought in and how much money every program spent. And if nothing else, you know then, are you spending more than you're taking in? You know, and which programs are generating the most money and which programs are costing the most. And it allows you to look at your business at the end of the year and say, you know, we spent this much money on this piece of our business, but it only generated this much income. Maybe we want to rethink that. So,
And where Maggie was talking about programs with nonprofits,
yeah, that's nonprofit talk.
For a business, you're looking at the sales revenue at the top of I'm going to describe now for you the standard format for the P&L, the profit and loss statement. You want to make sure you're keeping track of all the revenue, where the money's coming from. And you also then want to keep track of what does it cost to produce the goods that you're selling or provide the service that you're giving. So that's your cost of goods sold.
I wish we had a whiteboard.
Yeah.
You do right behind you.
We do.
It needs cleaning up, and I can get you a marker. But
You want me to grab
could you grab a marker, please? There's one in the box right there. While we're doing that, can I make a quick plug? You mentioned having a bookkeeper come in and look at your books every month. There's a cooperative that did a presentation for us earlier this year called ABC, Aid Bookkeeping Cooperative. And they're based out of New York, but you can do things online these days. You can send your financials online, they can look them over, be on the phone with you to fix stuff. And so they're a good one that understands co-ops too, because it's a little bit different when you're talking about the books in a co-op compared to another business. So that's a good option if you're looking for a bookkeeper and want, you know, even really part-time, they're open to those kind of things. I will include their info in the email that I send out with the homework.
There also are individuals, certainly in the Boston area, and I would assume around the state, who do bookkeeping, who have worked with cooperatives. Stacy Cordero, who does a Co-op Academy, will work individually with co-ops on bookkeeping. There are a couple of other people in Boston too, so the resources are around. And it's just one of those things where you see people sometimes deciding that they don't want to spend the money on this, but in the end, if you can't really track what your income and expenses are, especially when it comes time to like deal with the IRS, it can get very, very ugly really fast. So it's such a key part of your business, sort of tracking the finances, that it really can be worth having somebody come in to do it, even if it is an expense. You write it in as part of the cost of doing business. So, okay, here, I'm going to be your tripod.
Oh, okay. So the first thing to keep track of are your sales. So whatever the income that's coming in for selling items or performing services, keeping track of all the revenue. Cost of goods sold gets deducted from that. So cost of goods sold, that's all your so-called direct expenses. If it, you know, it's your ingredients, if you're making something, it's whatever the materials are. It's all,
feed the bees.
what you feed the bees. It's also your direct labor. So that the hours that you spend producing that thing or providing that service, the cost of those hours, the hourly rate that you get paid, that's part of the cost of what it takes to make that sale.
If you're running machinery, it can be the utility costs to keep the machinery on, or to keep the lights on in the building so that you can see what you're doing. Whatever you need to do to produce whatever you're producing is the cost of goods sold.
Lights are not indirect, lights are direct?
It depends on where they are.
Yeah, in many situations, the lights are indirect. But you might have a situation where you have a separate facility, separate plant, those lights, and if you can determine the cost of those lights separate from the cost of all the other lights.
Well, that gets tricky sometimes.
And so this is where the thing about accounting, and you have to remember this and don't let it overwhelm you, it's a cost benefit thing. It can be way too much work to figure out that light bulb versus that light bulb and the cost of that, and that's gotta be cost of goods sold. It can't be, no, forget about it. Your utility bill tells you the light cost, fine, it's an indirect expense. That's the simple way to keep track of it.
Yeah.
And then be consistent, don't change it up.
Right.
So you're always measuring, can I get this information? And so when the information's easy to get it and record it.
Yeah.
Julius?
With labor costs, where you would typically pay someone else an hourly rate, sometimes owners don't do that for themselves, right? So how do you factor in or account for the hours that you put in that you don't actually take from the budget? And do you think that's important to track?
I think it's important to track because for your purposes, you really want to know how much time it costs. And it's not exactly double bookkeeping, but the idea if you're not getting paid for your time, you have to get paid for your time eventually. So you want your projections to be able to be based on, okay, I'm working 60 hours a week and I'm getting paid for 30 hours a week. How many widgets do we need to make and sell in order for me to get compensated for all of my time? So you want to track it, but if you're doing financial statements, unpaid time is not a cost, right?
Right. It's
Sad.
equity, it can figure into equity
What?
for a co-op.
Well, that's up to the co-op and how you decide to calculate equity. If co-ops will track hours, unpaid hours, and that can contribute to an equity if it's given a dollar amount on paper.
And so if that figure was offered in a loan application to you all, how would that be seen? How would, because that's what a lot of worker owners have to offer is time.
Yeah.
I understand. And if that does carry value, how should they quantify it and how is it looked at in the loan world?
It's looked at as a level of commitment. Unfortunately, it's not something, if you can say without this time, we wouldn't be able to make this product and sell it and generate any income, that's really important. But ultimately, if you're looking at repaying a loan, it's cash that repays the loan. So, it would help me perhaps recommend that we make a loan if I saw that you have a co-op of 5 people, all of whom are putting in a lot of unpaid time. I would say these people are really committed. They're really trying to make this business work. They're not bleeding it dry by taking out money that's not being generated. But the bottom line is we also need to look at, is there the money being generated to repay the loan? So if your unpaid time is generating enough in sales so that there's income that could carry a debt, that's a great thing. And that's a big piece of what we would look at.
Other questions or yeah?
It seems like there's not really that many or at least like at the beginning of co-ops, there wouldn't be that many transactions and things so that's like, you know, an issue of like how do you, like which things to focus on. And then the other question I had was like, do you think are there a lot of people out there that are internally bookkeeping, or do you think that it's, you know, like, is it kind of the standard to, you know, outsource?
So I would say start your bookkeeping the day you start your business. And so even if you've got, you know, 2 sales a month, and then you're hoping to get to 10 sales a month, and ultimately to be viable you need 100 a month, start with the 2 a month, like keep track of it, because you're building that financial history, and the more you keep track of the information, the more you're building the discipline and then setting up the systems that you're going to need as the volume increases and you need more. So start there. And as far as internal or external bookkeeping, I see a mix.
Yeah, me too.
50-50. It doesn't seem to be one preference or another.
And is that paid time?
Yeah.
When it's internal?
It's up to you.
Yeah.
It varies.
Is that what you're seeing?
It varies. It varies. And the co-ops I see that do internal bookkeeping will often just bring somebody in at the end of the year to produce the year-end financials for tax purposes and do the tax statements for the employees.
And are those people doing other tasks, or is it just, are they just keeping books?
Generally what if it's internal?
Yeah.
It sort of depends on the co-op. If you are a business that has a lot of financial transactions, you might want somebody maybe part-time, but who was a member of the co-op and their job was to do the bookkeeping. Or it might be something that one person does for 4 hours a month and gets paid for it, or doesn't get paid for it. I mean, it's, there is no fixed structure around that.
What works for you. So I'll just carry on. The next line item on the P&L is then going to be your gross profit. And that's your sales minus your cost of goods. Sales gives you your gross profit. A lot of people measure your gross profit margin or percentage. And that's taking this number, and let's say we have 100 in sales, 20 cost of goods sales, that's great. And so 80 is my gross profit. 80 over 100 is 80%. I have a gross profit margin of 80%.
I'll make you a lawn.
That's nice. More, typically it's in the 20 or 30% range, or depending on the business. Food co-ops, grocers can be down in the 4 and 5% range. It's pretty small. So it just depends. What this gross profit percentage or gross profit number tends to be varies across industries. So
and there actually are documents you can. I did this when I was in grad school, which was now a long time ago. But there are books out there if you go to a business library where you can look up histories and information about different industries, and it will give you industry standards. It will tell you sort of what typical margins are and so what typical markups are on products in different industries. Studies have been done about everything.
Books or magazines or what do you?
Well, I know books because that's how old I am, but it's probably all online.
Right.
Okay.
Can you suggest a source for that kind of information? Online or a book?
Uncle Google.
I went to the Kirstein branch of the Boston Public Library, which is their business library. My guess is any college that has a business school would have information in their library.
What would they be called? I think that would be helpful for people.
I don't remember.
Industry benchmarks. Industry benchmarks. We're describing one of the basic financial statements, the P&L, the profit and loss. Sales minus cost of goods sold, goods to gross profit. The next couple of lines are where you're going to deduct the rest of your expenses. Your lights or your admin costs, your marketing, sales, things that don't directly
debt service.
Your debt service. paying back that loan, the interest cost of paying back that loan. Things that have basically nothing to do with whether or not you can make that glass of lemonade, or, you know, it's all the extra costs of just being in business, paying the bookkeeper.
I mean, it's interesting because these are expenses without which you would not have a business, but because they don't directly contribute to the development of your product or service, are considered, are those indirect costs? Indirect costs and not direct costs, not cost of goods sold.
Indirect, overhead, and then you did also want to back out interest, and you get to net income before taxes. And then the tax,
And then there are taxes.
charges taxes, and what you get left. Questions on the basic profit and loss statement? Do you feel comfortable kind of figuring out, okay, in my business, I know what makes up revenue. In my business, I know the difference between the cost to make that revenue versus all these indirect costs. And there's a worksheet in the...
Conceptually, it's easy.
Right.
It's just the,
You got it.
right.
And that's true for everyone.
Okay.
It is, because
Yeah.
conceptually, it's like, okay, that's very elegant. We
Right.
can do that.
Right.
But then you get into the nitty-gritty of my business.
Right.
And it's like, well, I don't know how to put that, where does that cost go? But if you think about it, and you think about it with your colleagues, your coworkers, it'll make sense. And that's the only real criterion. Does it make sense? There's not a right answer. There's things that you might look at, like, you know, if you put all your marketing costs up in cost of goods sold, somebody's going to ask you why. But more likely what most people do is they don't put everything in here that they should, because that way this will be higher. Right? So you want to make sure you get everything in here that you should, because you don't want to artificially
Right.
overstate this and make yourself think you're doing better than you are.
Right.
Because ultimately you do want to be able to calculate your break-even point so that you can figure out.
So your break even would be your net income?
Not quite. The break-even
I mean, we went over this last year, but
Yeah.
I'd appreciate a refresher.
Well, and Dorian just explained it to me, so.
Well, conceptually, what break-even is when I've sold enough stuff that I've covered all my fixed costs.
And fixed costs are costs that do not change from month to month. So
Oh.
your rent would be a fixed cost.
And my variable costs that go into cost of goods sold.
Right.
So if it costs me $1 to make $3, that dollar has to be covered. But I've also got fixed costs of $10 just sitting there. Well, if I only sell 2 things at $3 each, 3 times 2, that's $6. Cost me $1 each to make them, that's 2, so I got 4. But my fixed costs are 10. I'm not at break even.
You're in the hole.
I'm in the hole. So if I have a little tissue and clean this up, I'll do that again. There.
You got it.
Wrap up in 5 minutes or so.
Happy to. Does it make sense for me to go through this?
Yeah.
Yes.
In 5? Yeah, okay. So just briefly, if I have $3 of revenue, but for every $3 of revenue, so this is per unit. Every widget I sell at $3 costs me $1 to make. So I've got $2 gross profit. But what about all these other overhead and indirect, all these other marketing that are fixed? I'm not going to change them. If I don't make any sales, I'm still going to pay the electric bill and all of that. So these fixed costs equal $10. how many units do I have to sell to cover my fixed cost?
Because the fixed costs are gonna be the same. No matter how many units you make or sell, your rent is your rent, right? Your cost of goods, so the cost of goods is $1 per unit. So the more units you make 2 units, that's $6 in sales, but $2 in cost of goods sold. 4 units is $12 in sales, $4 in cost of goods sold, so then your profit is 8. So that number will change, but your fixed cost, because that's why they're fixed. That's $10 a month, no matter what your cost of goods sold is or what your sales are.
And you can see from this example that when I know my gross profit per unit at $2, 10 divided by 2 is 5. If I sell 5 items,
Minus 5. So she covers
I'm at
the
break
direct
even.
cost.
I'm break even. I've covered all my costs. The next unit that I sell, now if I sell 6 of these at $3,
18.
that's 18,
6.
less 6,
You're 12.
I'm at 12.
So
That's $2.
That's a $2 profit.
So you found that by dividing your fixed cost by the cost per unit.
The gross profit per unit.
By the gross profit per unit. For 1 unit, yeah.
Right.
Yeah.
And that tells you how many of those units you need to produce.
Got it.
Or how many hours of labor,
Yeah.
you know.
Right.
So I think with some people who aren't selling things or selling services in a job that's contracted on the sales and costs of.
Yeah. Mostly when you're a service business, most of what's going in cost of goods sold are your direct labor hours,
Your time.
your time. It takes me 30 hours every week to generate $100 of revenue. $30, and what am I paying myself for those 30 hours? And do the calculation, but you get to a dollar figure for cost of services sold.
And then you know your direct cost and you can figure that out for your overhead.
They never say COSS, but it's the same thing, cost of services sold.
And then so for a business that had a fluctuating relationship there between their sales and their cost of goods sold.
Well, there are
what would you
businesses that are
suggest?
seasonal,
Is that what you?
right?
Yeah, it just wasn't based on a unit.
Yeah, we don't have a stable unit, is what you're saying. The unit's gonna vary?
But you
Yeah,
can
yeah,
still
or like,
figure out
yeah,
what
lots
your
of people don't have
break-even
stable
point
units.
is. But
Yeah.
you should still know how many hours you need to work
Right.
to cover your cost of services, which is your pay,
Okay.
and your overhead cost, your
Yeah.
fixed cost.
Yeah.
So it might vary, what you bring in might vary, but if you can come up with that number, that's the minimum that you wanna do every month, so that you come out break even. And slow months should be break even months.
So I think we were told, 5 minutes, wrap it up. and
Well, I just wanted to do one segue
Yeah.
from that, which is just to go back to loans. There are 2 kinds of loans that we tend to make, right? One is a term loan. If you want to buy a tractor and you need $20,000 to buy the tractor, you borrow $20,000, you take the whole $20,000. We come up with a payment schedule and you pay that off every month over, 10 years.
Yeah.
The other kind of loan is a line of credit, and it's exactly for those ebb and flow types of businesses where it's not completely reliable and within your control. You're not making widgets, you don't have a steady market for your services. You know, if you're in landscaping, right, April through September, you can pretty much be busy, but then the winters are really slow. Especially as a co-op, you don't want to lay everybody off in the winter time. So you have what's called a line of credit, which means when your business is slow and you need some cash infused in your business, you draw down the line of credit so that you can continue to pay all of those fixed costs and your labor costs. And then when things get busy again, you pay that line of credit off. And hopefully you can work your balance back down to 0, and then things slow down again, and you start to draw it down again. So it works like a revolving line. The plus is that paying the debt service, you're only paying on how much you have actually drawn down from your line of credit, unlike a term loan where there's this amount of money and that's what you're paying on until you're all paid back. That might have been too much information. It seemed like a good moment to throw it in.
And I'm not sure what the next step is, if people look
Yeah, so
interactive.
just another plug for Co-op Fund. A lot of lenders don't understand co-ops. They don't. So who's going to underwrite this? All 5 of you, we don't really understand. But Co-op Fund gets that and offers, support in getting your loan application ready too. That's their work, is to work with you to get that in a good place where the loan committee can approve it, or maybe they'll might come back to you and say you need to fix this part, and if you are stronger in this area, then we can fund you, that kind of thing. But it's a good resource to know about. So I encourage you to, when it's your turn to work with one of the 2 presenters, that you talk about your relationship, and if you ever are going to be looking for a line of credit or a loan, that you ask about that.